that brings up another question. I get deals like that too, like sent to me, sent to my email. You know, brokers have investors set up on auto emailers. What are your steps? Because I find myself not with the same issue that you talked about, where your assistant has to sort through it all because there's just so many deals. And with a multifamily deal, I feel like there's a lot more to consider. Like people
Oh,
send
yeah.
me a single family, I can get back to them typically in like 20 minutes. And I know like if it's got deal potential, but multifamily, I feel like there's so many more things to consider. So what are your steps when you get a deal like that, just to screen through initially to know if you should pursue it or not?
Yeah, I think the first thing is, well, you recognize this simply because of the fact that you're doing rentals and you've got a rental portfolio, and you're actively managing a business where you've got income, expenses, and so on. And so very similarly for a multifamily asset, that's exactly what you're looking at. Is firstly, what do the numbers look like? I don't want to fall in love with the property and its aesthetics and things like that, and then the numbers end up not working out, right? And so the very first thing is what do the numbers look like? So I have to have a trailing 12 months of financials and a current rent roll just to get my eyes even on the deal. I can very well look at that now in a matter of 15 minutes or less, and rapidly determine whether this is something that's even worth any more time, just because of repetition and multiple iterations and at bats. And so that's really what it comes down to is determining, based on the income that this is producing, based on the expenses that it currently has over the last 12 months, what is it performing at today? What I don't want to do, and what someone should be wary of, is accepting what the pro forma rents may be, as they've been suggested by whomever sent you the deal, and accepting the fact that, yes, absolutely, I can increase my rental income by 25% over the next year. Uh, which you want to know whether the deal is self-sufficient with its current set of financials, um, in addition to making some appropriate adjustments to how expenses will in fact increase, because there's a couple of different items, expense line items, that will in fact increase simply because of the transaction. And so taxes being the biggest one. But yeah, you can very quickly tell what the net operating income will be, and whether or not whatever amount of debt that you place on that can be supported by that net operating income.
That's awesome. So there's a few things that stood out to me there. So there's a big difference between, which I don't think a lot of people realize, the pro forma, which is what you receive a lot of times initially, and the T12, which stands for trailing 12, which are the actuals, right?
Right.
And so you need to be basing your analysis off of the T12. So always request that. And then you said the T12 and the rent roll are what you receive. What are the main things that you want to see to pursue it to the next level? I know you said you're looking at income and expenses, but is there a specific NOI, net operating income, that you're looking for, or a cap rate that you're comfortable with, or how do you decide to move on with it?
Yeah, it's very interesting because now you get into some of the nuances and some of the complexity, because there are different things where there are different items that folks will look for in order to determine whether it's an asset that fits their investment criteria. Some people may very well have family office money or a fund or something like that, where buying an asset that produces a 5% cap rate is something that's sufficient for them. For the types of investors that I'm engaging with, we're looking for much greater returns than that. In addition, and I can talk to you about the sort of the gem that we have in terms of one of the properties that we have. It's our most recent acquisition, and the upside that we're experiencing through that's even better than we expected. The types, my investment thesis is buying assets where I can increase value, so force the appreciation, do have investors engage with me on those transactions, and then do a cash out refinance that allows me to return the entirety of their capital within 12 to 18 months, no more than 2 years, but 12 to 18 months is the target. And then allocate them an equity position even after they've been paid back at a rate of about 10% or so, and continue to get cash flow throughout the remainder of the deal. And so
Wow.
those deals are very hard to find, but they can be found, and they are out there. And there's going to be a lot more out there, especially given the economic climate and things that are bound to come here over the next 12 to 18 months and beyond.
Yeah. Wow. So just to break it down more in layman's terms for people who don't do multifamily all the time, like myself. So you're raising money from people who are friends of family, people who are interested in investing in multifamily, and they're covering about, so the bank will give you 75% typically. Is that what they're giving you for the purchase price?
So the capital markets have shifted
Okay.
over the course of the last couple of months. And typically, just for the sake of simplicity, we can say, yes, 75% LTV is what loan to value is what you might expect. They were more, I think, flexible, I guess, prior to COVID, and perhaps going up to 80% LTV, but typically 75%, sometimes even 70%, depends on the deal, and depends on some other facets that would dictate that. But 75% is a good number.
Okay, got it. So that, say $1 million house, the bank will give you 750,000 of the money required for the deal, and then you've got to go out and raise the other 250,000 from investors, and then those investors get to split. Is it what, 85% of the equity in the deal? Is that typically how it's split, or 80, or?
Yeah, it really depends on how the syndicator structures the deal.
Okay.
I will tell you, the first couple that we've done a 70-30 split where I've allocated 70% to the investors for their role in the deal. Now, it's not just the 25% though that you would be raising, depending on how much work is required. So you've got the renovation piece, right?
Got it.
So that would be part of what you would want to be raising as well: holding costs, transactional costs, etc. And so that all is included there. Okay. And depending on the deal, if I'm buying something that is more of a retail priced asset, that's the type of transaction or the type of syndication model I might pursue. If we've got a deep value add opportunity, that's where I'm pursuing something that is what I'm sort of terming as a next level syndication model, where, and this gets a little bit more detailed, but where I'm basically providing more of a private lending approach to the investors, where I'm guaranteeing effectively a certain amount of return in the form of a preferred return.
Got it.
And then returning all of their capital at the point of refinance, and then allocating them equity in the deal thereafter. And so it's unlike sort of a conventional equity position, but more of just a private money investment that they then receive back their principal plus interest, and then are allocated a portion of equity on a go-forward basis. So it seems like that's the type of approach that most people are in favor of, because there's no risk any longer once they get their money back, and they can invest it into another deal. And that's where this topic of the velocity of money really comes into play. And that's one of the things that I really like to talk about is the velocity of money. So yeah.
Hey, hope you enjoyed this portion of the interview with Christian. If you did, give it a thumbs up, hit the subscribe button. If you want to hear the full interview, you can check it out on any podcast player. Just search for the Living Off Rentals podcast. Also, join the Living Off Rentals Facebook community. You can ask any questions there or discuss any rental investing related topics. I hope to see you there. If not, I will see you in the next video.